Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy with all your monthly ETFs. Today we're breaking down something that every income investor cares about, and that's stability, especially in today's markets. In this video is called Stress-Free High Income ETFs for Long-Term Investing, and we're analyzing all the top picks that I have found. These are the ETFs that are designed to generate high income without the stress, the volatility, or the sleepless nights that often come with high yield strategies. And before we jump in, I got to give a huge thank out to all of our YouTube subscribers and all of our Patreon supporters. If you haven't joined us yet, hit that subscribe button, hit that bell notification. It's all free, and it just helps the channel grow. Now let's get into the big question. Can you really get high income and stability all at the same time? Notice to all viewers, past performance does not guarantee future results. This information in the video is for educational and entertainment purposes only. If you are looking for financial advice, always contact a financial advisor. I am not a financial advisor, and I don't plan on giving financial advice. Here's the core problem. High income ETFs usually come with a trade-off. High yields often mean high volatility. That's what I call the volatility paradox. You get the big payouts, but your account balance can bounce like a roller coaster. In down markets, these funds can take big hits, and that's why so many investors are searching for something different, income that doesn't destroy your peace of mind. The goal is simple: high yield, low stress, or as we like to say, sleep well at night. So how do we find ETFs that pay strong income and stay stable? Well, we apply a very specific checklist. Number one, a reputable fund provider. This matters. You want companies with a consistent track record in the ETF business. Number two, index-based strategies means these ETFs don't rely on a single stock. They diversify across hundreds of companies. Number three, a high quality strategy. No crazy leverage, no lottery ticket trades. Number four, defensive qualities like covered call overlays that bring in premium income while smoothing out volatility. Number five, a strong historic track record because consistency matters more than hype. And number six, a recovery capability. If the fund cannot recover after a downturn, it doesn't belong in a stress-free portfolio. Our first fund is GPIQ. This is the GPIQ Nasdaq 100 Premium Income ETF. It's one of the cleanest, simplest income strategies out there. It tracks the Nasdaq 100, which means you're getting exposure to the top companies like Nvidia, Apple, Amazon, Microsoft, but with a covered call overlay. The yields run about 10% per paid monthly. What makes this attractive is the potential and predictability income stream and the downside protection. The covered calls help cushion drops in the market while giving you a potential steady stream of income. It shines especially in sideways and flat markets. Now, we have one of the most highly praised high income ETFs for stability, and that's going to be called DIVO. This is a conservative income machine. DIVO pays around 5%, which might not seem high. It seems low compared to what we've been looking at. But the ETF is designed for capital preservation and low volatility. DIVO takes high quality dividend paying stocks like Johnson & Johnson, Home Depot, Microsoft, and layers it in a tactical covered call strategy on top. They don't sell calls all the time. They only do it when the market conditions are right. That means low volatility, stronger downside protection, and more consistency in your account value. For the conservative investors or retirees who really are looking for stability first, DIVO is extremely hard to beat. Now we add SPYI, the high yield S&P 500 income ETF. Now, SPYI is a more aggressive sibling in this category of enhanced income solutions, paying a yield around 12%, an exposure to the entire S&P 500. The strategy covered call overlay. What makes SPYI appealing is that it is tied to a broad market. The S&P 500 has a long history of bouncing back after corrections. And SPYI has proven that it can generate high income while recovering quickly from market dips. Now, that's a rare finding in an ETF. So DIVO is a low volatility option. SPYI is a high income counterpart with strong rebound capabilities. Now let's take a look at our number 4 and number 5 ETF selection. And this is going to be our large cap premium income. Now let's take a look at BALI and GPIX, the two premium income ETFs built around large cap leaders. BALI is a large cap premium income. It's focused on large cap leaders like Nvidia, Microsoft, Apple, Amazon. These are companies with strong cash flows, long-term growth potential, and reliable recovery after downturns. BALI offers and overlays an option to generate additional income. And here's why that matters. When the market drops, the strongest companies tend to recover first. And BALI holds the strongest. Since inception, BALI has had an excellent performance, making its options for investors who want both income and long-term appreciation. Now, GPIX is the S&P 500 premium income. Now, GPIX is another premium income ETF that's tied to the S&P 500 with yields between 7.5 and 8.5. This ETF shines because it offers a broad diversification, a solid income stream, a lower volatility than pure high-paying yields, and it's simple, it's stable, it's consistent, and all the ingredients for a stress-free long-term holding. Now, let's add some diversification because a truly stress-free portfolio is not just equities. This is why we use IYRI and QDVO come into play. IYRI is a real estate high income ETF. IYRI is a real estate focused covered call ETF that's paying around 11% yield. It invests in high quality REITs, real estate operators, and diversified property sectors. Now, REITs often offer you a lower volatility, stronger income streams, and long-term stability. IYRI is ideal for risk-averted investors who wants diversification outside of technology and outside of the S&P 500. Its lower beta means it doesn't swing as hard with the broader markets. Now, QDVO is the growth and income part of the ETF. QDVO is a more growth-oriented option in the pairing. Now, the yield is more 10%. So the strategy, it gives growth stocks and income generation potential. QDVO tends to have more upside potential, stronger capital appreciation, a more diversified stock mix. This is great for investors who want not only income, but the possibility of an account value growing faster over time. Let's wrap everything together. Covered call strategies dominate. Most of the ETFs today use covered calls, and there's a reason for that. Covered calls give you the potential of predicting your income. It also gives you the potential of a smoother volatility. Investors get a calmer ride without sacrificing yield. Diversification matters. We looked at ETFs tied to the Nasdaq 100, the S&P 500, the large stock caps, and real estate. This diversification reduces stress and lowers the chances of major drawdowns. Number 3, long-term focus. These ETFs are not day traders. These are not day trading products. They work best when held long-term with low and where income and stability compound over time. Number 4, probably the most critical one, is recovery capability. In high income investing, recovery is everything. If a fund cannot bounce back from downturns, it's going to cause stress. And that's why today's list focused on ETFs with strong historical recovery. In closing, guys, I think we found probably the simplest and easiest ETF packages for you to look at. This is not going to be your yield max, your round hill, your weekly pays. This is not going to be the ones giving you all your stress. This is going to give you the long-term focus. Hopefully this helps you guys out. I know it's been struggling out there, but don't be afraid. Stick with it. Stick with your plan, and let's continue on.
Thank you for watching.